Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar is restoring old ties. Stock indices have recovered from their slump. Gold has been on a roller coaster ride, and Bitcoin shot for the stars. The escalation of trade conflicts has led to a temporary strengthening of the US dollar. Donald Trump has sent numerous letters to various countries specifying the size of tariffs. They will come into effect on the 1st of August. Until then, the White House is open to negotiations. There are rumors in the market that the United States will soon conclude trade deals with India, Taiwan, and the European Union. According to Deutsche Bank estimates, the average U.S. tariff is 18.7%. This is lower than the 22% that was in place on Independence Day. However, the figure is still high. Such import duties increase the risks of an economic slowdown and accelerating inflation, but there is no talk of a recession. Therefore, there was no fall in the USD index, as there was in April. Investors have moved away from the Zell America strategy. As a result, the dollar and U.S. stock indices have diverged. The greenback is once again behaving as a safe haven asset, falling when risk appetite rises and vice versa. After a slight dip due to Donald Trump's letters, the S&P 500 began to rise again. The stock market perceived the escalation of the trade conflict as prolonging the delay. Investors bought up the dip. The U.S. economy is strong, inflation is slowing, and corporate profits are high. In such conditions, the potential for a correction in the broad stock index is limited. Bank of America raised its forecasts for the index of the 500 largest companies to 6,300 and 6,600 at the end of the year and in 12 months. Goldman Sachs sees the market at 6,600 and 6,900. Technology corporations are leading the stock market rally. NVIDIA became the first company in the world whose capitalization exceeded $4 trillion. Since the beginning of the year, its shares have risen by 20%, and since 2023, by more than 1,000%. This allowed the Nasdaq Composite to update its record highs. The S&P 500 came within arm's reach of them. Stock indices are supported by expectations of a resumption of the Fed's monetary policy easing cycle and a successful auction of $39 billion in 10-year Treasury bonds. High demand led to a decline in yields. The S&P 500 is seeing new record highs. Gold has been on a roller coaster ride. Donald Trump's criticism of the Fed put pressure on the precious metal. The president said Jerome Powell should resign if he misled Congress about the renovation of the central bank's headquarters. The Republican called the chairman a child who cries about inflation. But there is no inflation. The White House host once again called for lower rates. However, the more he does so, the less likely it is that the cycle of monetary expansion will resume. The stronger the action, the stronger the opposition. The futures market reduced the chances of a rate cut in September from 94% to 66%, which dealt a blow to gold. The minutes of the June FOMC meeting helped the precious metal. Two officials are ready to vote to ease monetary policy as early as July. The doves are focusing on the cooling labor market and the reluctance of inflation to accelerate. The chances of gold breaking out of the 3,250 to 3,450 trading range are slim. Gold is supported by high appetite from central banks and a high degree of uncertainty. Nevertheless, the rapid rally of the precious metal in 2022 to 2025 suggests that it is overbought. Bitcoin's price exceeded $117,000 for the first time, thanks to the inflow of capital into specialized exchange-traded funds and demand from companies accumulating cryptocurrency. An improvement in global risk appetite supported Bitcoin. There is an active redistribution of roles in the digital asset market. Back in 2020, miners, offshore funds, and anonymous wallets owned 95% of the Bitcoins in circulation. As a result, a 2 to 9% increase in supply led to fluctuations in Bitcoin of 64 to 74%. Currently, about a quarter of tokens have passed into the hands of institutional investors. The movement of cryptocurrency is becoming more limited. It is becoming like traditional assets and finding its place in investment portfolios. There is an opinion in the market that the potential for a Bitcoin rally will be limited to 10 to 20% per year. In the short term, the chances of the bulls continuing the rally on Bitcoin look high. Global risk appetite is high, as is demand from companies accumulating cryptocurrency and ETFs. The supply of tokens is limited, leading to higher prices. The key event of the week leading up to the 18th of July will be the release of U.S. inflation data. Bloomberg experts expect consumer prices to accelerate in June. If this does not happen, Donald Trump's calls for lower interest rates will intensify. Despite the labor market remaining strong, the reluctance of PCE to grow gives the Fed grounds to resume its cycle of monetary expansion as early as July. In this scenario, the S&P 500, Bitcoin and gold will continue to rally, while the US dollar will fall. Conversely, a significant acceleration in inflation will prove the Fed right. The central bank did not cut rates due to concerns that tariffs would trigger a surge in consumer prices. If this happens, the Fed may extend its pause in the monetary expansion cycle until the end of the year. In this case, risky assets and gold will come under pressure, and the risks of a downward correction in the USD index will increase. Other events worth noting include news of a possible trade agreement between the US and the EU. Insignificant tariffs will not cause serious damage to the Eurozone economy and will allow the euro to grow. It is another matter if the deal falls through at the last minute. An escalation of the trade conflict could dampen risk appetite and support the dollar as a safe haven currency. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.